The tax breaks on Madeira Island in Portugal have been gaining a lot of attention. If you are a business owner, investor, or digital nomad looking to cut your tax bill while staying within the European Union, Madeira might just be your next move. In this video, we'll walk you through the tax incentives available, how to qualify, the timelines involved, and what you need to know to make it work. So grab a pen, hit that subscribe button if you haven't already, and let's dive right in. So first of all, why Madeira? It's a small Portuguese archipelago in the Atlantic Ocean, about 1,000 kilometers southwest of Lisbon. Known for its lush landscapes, mild climate, and tourist appeal, Madeira is also an autonomous region of Portugal with its own tax perks. As part of the EU, it offers stability and access to European markets, but its special tax regimes, approved by the European Commission, make it stand out. The big draw: a corporate tax rate as low as 5% for qualifying businesses, plus a slew of other benefits. Whether you're looking to run an international company or just looking to optimize your finances, Madeira's tax system is worth a look. The backbone of Madeira's tax breaks is the Madeira International Business Centre, or MIBC, sometimes called the Madeira Free Trade Zone. Established in the 1980s, the MIBC was designed to boost the island's economy by attracting foreign investment. It's not an offshore tax haven in the shady sense. It's a legit EU-approved program that's been renewed multiple times, most recently extended through 2028. The MIBC offers a range of tax incentives for companies, from low corporate rates to exemptions on dividends and capital gains. Let's break it down step by step. So step one, setting up a company in the MIBC. To tap into these tax breaks, you'll need to incorporate a business within the MIBC framework. This isn't just for huge corporations. Small businesses, startups, and even solo entrepreneurs can qualify as long as they meet the requirements. You'll need to apply for a license from the regional government of Madeira through a local management company, like Madeira Corporate Services or NewCo. The process starts with submitting a business plan outlining your activities. Think international services like IT, consulting, e-commerce, or shipping. The application itself takes about 1 to 2 months to process, assuming your paperwork is in order. So what paperwork are you going to need? You will need your company's articles of incorporation, proof of identity for shareholders and directors, and a detailed description of your business operations. If you're not in Portugal, these documents might need to be apostilled or legalized and translated into Portuguese. You'll also pay a small licensing fee, cover setup costs, right? And here's where the pro tip is: hire a local expert to handle this. They know the system and can save you huge time and mistakes. By the way, My Latin Life is a full-scale immigration consultancy. We help people get visas in Portugal, residency in Portugal, put you on a path to citizenship, and of course, incorporate business in Portugal as well, and how to do both of these things in a low-tax way that gets you on the path to citizenship. Okay, so if that's interesting to you, there's a link in the description. You can book a call with us, and we'll be happy to answer all your burning questions. Moving on with the process here. So step two is meeting the substance requirements. Here's where Madeira stands out from traditional tax havens. It's not just a mailbox address. To get the tax breaks, your company has to contribute to the local economy. There are two main ways to do this, and you only need to meet one. So option one is create 1 to 5 full-time jobs within the first 6 months of operation and invest at least 75,000 euros in fixed assets like equipment or software within 2 years. Option two is create 6 or more full-time jobs within 6 months, no investment required. These jobs must be for people living in Madeira, and they need proper contracts and social security contributions. Okay? So basically you need to hire people. And the more people you hire, the more incentives you get. This substance rule is key. The EU and Portugal want real economic activity, not just shell companies. So if you're a digital nomad running a one-person show, you might need to hire a local assistant or two. For bigger firms, this is less of a hurdle. Once you meet one of these conditions, you're locked in for the tax benefits. No need to keep adding jobs every year, though you can't let them drop below the minimum either. Step 3 is enjoy the tax breaks. Once your company is licensed and meets the substance rules, here's what you get. The headline perk is a 5% corporate income tax rate on profits from international activities, way below Portugal's standard 21% or Madeira's regular 14.7%. This applies to income from outside Portugal or from deals with other MIBC companies. If you do business with Portuguese residents outside the MIBC, that income is taxed at a regular 14.7% rate, so keep your operations focused internationally to maximize the benefit. But it's not just the low rate. Dividends paid to non-resident shareholders like you, if you're based outside Portugal, face no withholding tax, as long as you're not in a blacklisted tax haven like Panama or the Cayman Islands. Capital gains from selling shares in your MIBC company is another question. That will be tax-free for non-residents, again barring blacklisted jurisdictions. Interest, royalties, and service fees paid to non-residents, no withholding tax either. Plus, you get an 80% reduction on stamp duty, property taxes, and transfer taxes for transactions involving other non-residents or MIBC firms. These perks run until December 31st, 2028, though the program could be extended again. There is a cap though. The tax benefits are limited based on your taxable profit and job creation. For 1 to 2 jobs, the cap is 21.87 million euros of taxable income annually. For 3 to 5 jobs, it's 27.34 million euros, and for 6 or more jobs, it jumps to 164 million euros. Exceed that, and the excess profit is taxed at 14.7%. Most small businesses won't hit these ceilings, but it's worth knowing if you're scaling up. Okay, now let's talk timelines. So step 1 is getting licensed, which takes 1 to 2 months. Step 2 is hiring staff or investing, which has a 6-month deadline for jobs and 2 years for the 75,000 euro investment. Once you're compliant, the tax breaks kick in immediately for that tax year, which follows the calendar year in Portugal. You'll file annual tax returns by May 31st of the following year, and the 5% rate applies retroactively to your qualifying profits. From start to finish, you could be up and running with tax savings in under a year, sometimes as little as 6 months if you're organized. So what else do you need to qualify? Your business must fit the MIBC's scope, so think international trade, services, or shipping, not local retail or tourism. Shipping companies get extra perks through the Madeira International Shipping Register, or the MAR, with full tax exemptions on crew wages and vessel-related income, except for domestic Portuguese routes. You also need to show economic substance beyond the minimum, like an office or real activity, not just a P.O. box. And your company can't be a bank or insurer unless it's a specific type allowed under EU rules. Some practical tips: get your ducks in a row early. Apostilles and translations can take weeks if you're abroad. Also, budget for local hires. Madeira's minimum wage is around 820 euros a month as of 2025, plus social security costs. Use a local service provider. They'll handle the licensing, accounting, and compliance, which is a must since everything is in Portuguese. And check your home country's tax treaties with Portugal. Madeira benefits from over 70 double taxation agreements, so you might avoid double hits on your profits. And again, My Latin Life, we're a full-scale immigration firm. We can help you implement this. There's a link in the description for you to book a call with us and speak to us directly. So what do you gain? A 5% tax rate is one of the lowest in the EU, saving you big compared to, say, Germany's 30% or the US's 21%. No withholding taxes means more cash stays in your pocket. You get EU market access, a stable legal system, and a strategic location bridging Europe, Africa, and the Americas. Plus, Madeira's quality of life is safe, affordable, and scenic, making it a great base if you're relocating too. Your company can operate globally while you enjoy lower personal taxes as a resident, though that's a separate topic we'll cover another time. One caveat: the MIBC isn't forever. The current regime lasts until 2028, and while it's been renewed before, global pressure on low tax zones could change things. You need to incorporate by December 31st, 2026 to lock in the benefits through 2028. After that, it's anyone's guess, though Madeira's track record suggests it'll fight to keep its edge and renew this program that's been around for decades. Also, if you're in a blacklisted jurisdiction, these perks don't apply, so check Portugal's list before diving in. I know stuff gets complicated, that's why you want a team backing you. Again, book a call, link in the description. And that's the rundown on Madeira Island's tax breaks. It's a solid option for tax optimization, low rates, EU compliance, and real economic impact. If you've used the MIBC or have questions, drop them in the comments. We'd love to hear your take. Don't forget to like, subscribe, and hit the bell for more guides like this. Thanks for watching. We'll see you in the next video.